Hi guys, I'm Vishal. I work at Multicoin Capital. It's a 7-year-old crypto native investment fund. We are an early stage, thesis driven investors. Historically, we have had claim to fame by investing in Solana, Helium, RV, HiveMapper in early days.
Hello, my name is Ryan, founding partner of Hashed. We started from 2016. We so far invested like over 200 early stage crypto startups, and we are like kind of positioned as a bridge between Western and Eastern. We have office in San Francisco, Korea, and Singapore, and India. Now we are opening up office in Abu Dhabi. Um, India market, obviously, a very strategic market for us. So Hash Emergent is putting a lot of resources to explore the like founders here.
Hi guys, so my name is Sanat, and I run a fund called Shaizen Ventures, which is we have an office in Miami and in Dubai, and we do a mix of both DeFi, so a lot of liquid DeFi yield farming, as well as venture capital investing. And prior to Shaizen, I ran the market neutral fund at Block Tower Capital in Miami. And the other, my other India connection is that I was the first investor in CoinDCX here. I don't know how many of you guys use CoinDCX. Right, yeah. So
Great. Uh, so before moving into anything, the first thing is today we're going to discuss where VCs see better ROI, whether application or infrastructure. But before moving to main question, the first thing is what are the current application or infrastructure layer projects which you are seeing and are interested in, and you can take on one by one. Vishal, you can go first.
Uh, Sure. I mean, first of all, there's a lot of discrepancy in what is application. Like some people I know also think of Helium and HiveMapper as consumer. So if you want to go along that route, I think we have achieved a threshold scale. We are like far from done, but as an industry, we have achieved a threshold scale where we can route payments for microcents, and that is the core of any deepin, be it Helium, HiveMapper, Grass, and a bunch of others. So deepin is definitely a massive category. Like there is a lot of latent resources in the world that just could not be used because the cost of coordinating them is higher than the benefit of coordinating them. So I think deepin is huge. Stable coins are just going to be massive because if you really go back to the Bitcoin's white paper, the first line it says is like payments and cheap, fast payments basically. So I think the world's leaders, regulators, fintech investors, everybody is realizing that at the threshold scale is good enough, and emerging markets and stablecoins are like a marriage made in heaven. I can go on and on, but I'll just say these are like the top two that you can think of.
Yeah, so last like 8 years, all the like biggest return is from the infrastructure investment, like a Bitcoin obviously, and all the L1s, Solana definitely like a few thousand X, and like still if you look at the top 100, like more than 50% is L1. And now recently, I think a trend is like changing because last cycle still there's not many usable applications, and DeFi definitely started from 2020, and very few DeFi survived, like Uniswap, DYDX, and Aave, and 99% of the DeFi died, and now it's a meme coin and AI meme coin and like gaming, and also like many applications are coming out because the user experience in Solana, obviously, like high performing chain, can provide a very, very good experience, quite similar level of like Web 2. So last cycle, just crypto native using like application. So that's why like, they have to study a lot to use a DeFi. They have to learn the funding curve, etc. But now just one click. If you go to the Phantom wallet or like Aptos wallet, Sui wallet, you can use the application very, very easily. That means like you can onboard a lot of mass user, and then like this mass user can make like a very sticky relationship with the application, not underlying infrastructure. So still, there's a lot of maximal list of the Ethereum Maxi, Base Maxi, and Solana Maxi, etc. But now it's like a lot of application maxis are coming out. One the example is like Hyperliquid. Hyperliquid is not from any specific L1, but they have a very loyal user, and they launched their own from their own L1. Users not like they don't care about like which layer one they're using. They care about the Hyperliquid itself and how they can provide a very good user experience and better liquidity and like all the connectivity. Also, virtual protocol, which is AI meme coin. Nobody care like underlying L1 is a base. But anyway, virtual protocol making a so much loyal user. So the application onboard like a lot of loyal user, which is sticky to the application. Then I think the value will be accrued to application. And now I think we're like we can start to see a lot of like fat application era rather than just fat protocol era.
Great. So I think for us as a fund, we have our roots in DeFi. Right? So we were some of the early players in the DeFi space during the DeFi summer of 2020, wrote some of the early impermanent loss white papers and things like that. So to me, our thesis is primarily in DeFi. We're very big players. I think there are two big use cases that have I wouldn't say found product market fit, but the two killer apps for crypto today. One is stable coins and the other is DeFi. And so we're very active in both of those areas, looking at new projects. I also tend to look at real world assets, which is again related to DeFi. Think that a lot of things that are today, everything from stocks to real estate to mutual funds, everything will get tokenized and will be on chain. So I've been looking at a lot of protocols, applications in that space. And lastly, I've also been actively looking at AI agents, and I'll be happy to cover any of these topics more.
Sure. First, I'll touch upon the infrastructure part, and I have a question for Vishal and Ryan. You have mentioned, Ryan, that in the last cycle, they were like the user experience was not there, and there were not many applications to use. But now that has changed. But what are the current missing stack from the infrastructure side, which you are interested in and currently looking at? And same for you, Vishal.
Yeah, so first of all, I think usually I think two missing parts. One is definitely like a regulation body. I mean, like everybody, on-chain is definitely different, but I think to onboard more mass user, they have to feel the safety. And currently, like a centralized exchange can provide more like safety net for the user in terms of the regulation. And obviously, still, a lot of regulator doesn't have too much idea about how to regulate the DeFi, how to regulate the on-chain application yet, because still there's non-KYC and like still there's a lot of risk from them perspective. So I think this is one of the missing part. The other thing is I told you that like wallet side is providing like a very better user experience now, and start to pick up the normal user. I think still the wallet, the connectivity to the real world is still very weak. For example, like on ramp, off ramp is still there's a lot of like hassle. So I think wallet part is very important, and eventually there's a top funnel to onboard like a mass user. Then I think a more on-chain application will be more viable.
Vishal?
Cool. I'll try to, add on to that. So one thing, if you just zoom out, and like we all are, used to living in our own bubbles, but if you add all the number of traders across equities, FX, commodities, crypto, and any other asset class, they don't even come to 1 billion, if I can think correctly. Like it's probably in a few 100 million. We have basically tapped that market out now. So the pitch going forward is to get more people who are like not really fascinated by trading tokens or equities. What they want to do is manage their finances maybe, or have some entertainment, like, broadly speaking. These people are generally well served in developed countries, but in emerging countries where they're not well served, they're probably not very well educated either in terms of how to go through all the hoops of crypto. So the first and foremost thing is the user experience. Make it simple. Like log in with Google, log in with biometrics, passkey, social logins. And in the last 12 to 24 months, we have seen our industry make significant progress on that. So like if you look at Poly Market, a lot of it was like easy using, stable coins and other things. Second would be, like there are a lot of people who don't actually trust their governments or like the banking institutions to save their money, but they don't have a choice. If you gave them a very simple wallet, not like a degen trading wallet, but a simple wallet where you said, hey, you can just keep your $100 savings in this wallet under your custody and in stable coins like dollar denominated so you can have the purchasing power, that's great. And on the third side, which is where you go to meme coins and AI agents, is there are people who are willing to go through these hoops, but they need some more entertainment. And this entertainment, goes and creates attention in this world, which is, attention deficit economy. Basically, everybody's trying to get everybody's attention. So you get them via entertainment and then tell them, oh, you can actually use this for good things. So yeah, some applications and then that one.
So it might be a good time to talk about stable coins. And I think to what Vishal said. So as I said earlier, stable coins are, I think, the killer app, or it's the one application in crypto that has found product market fit. Okay? And to me, so today there's $190 billion worth of stable coins. And we started off with USDC and Tether. The two of them are still the most dominant. But now we have the next set of stable coins, yield generating stable coins. I think Vishal, I know you said that stable coins are supposed to be boring, right? The whole idea is that it has to be a stable coin, it has to be backed, has to be in a bankruptcy remote entity, and it has to generate yield. And so now we've seen, I think, let's call it the stablecoin 2.0, where you have stablecoins delivering yield, and the question is, where does that yield come from? And many of them, like BIDL, like USDM, Mountain, which Vishal's invested in, they generate yield from treasury bills and real-world assets. There are other stable coins like Ethena, which is the one my former firm invested in Block Tower, which generates yield from a structured product. It's the carry trade where you go long, you're basically staking ETH, and you also sell the ETH perp, and you earn yields from both of those. So to me, stable coins have come a long way. But going forward, I actually think it's still very early days in stable coins, right? To me, long-term, stable coins will replace savings accounts, right? And of course, maybe in India, it's going to take a while for that to happen. I think in the US, hopefully with the right administration, it will be, excuse me, it will be a lot faster. What will happen, I think, is the entire new generation of people will not have bank accounts. They will have a very friendly wallet, and they'll use a wallet for all their transactions. And they have stable coins that are earning yield. And I think there are going to be new kinds of stable coins, things like for payments. You could argue that even though today we have USDC, USDE, they're still not the right stable coins for payments. Maybe you need another stable coin that is very low, has almost no fee. It has it's something built for high volume, low value transactions. So a lot of these things, this is what I'm looking for as a VC. I'm looking for startups that are building something new in this space.
Great. So we have already covered some of the missing stacks from the infrastructure side. As Ryan mentioned, there are like things around regulation which can be improved, on-ramps and off-ramps which are not there. Vishal has also doubled down on the UX part which can be improved. And Sanat has rightly pointed out the growth of a stable coin. But on the same side, on the other side, there's applications which we need a lot of them on this current infrastructure, which is already there. And you have already mentioned AI agents. They're like meme coin cycle as well. How are you looking at some of these subsectors on the application side, and what are you interested in? We can start with you, Sanat.
Yeah. So AI agents. How many here are familiar with AI agents? Okay, so quite a few people. Awesome. So this is a fascinating category. So AI and crypto is not new, right? And a lot of it came, historically, AI and crypto was decentralized compute, decentralized data, etc. AI agents are a new space, and I think literally all this happened in the last 3 or 4 weeks with, and again, I'll just give a quick background here that there is this, how many of you guys follow Truth Terminal? So yeah, so True Terminal, this was actually a AI agent created by the developer called Andy. And True Terminal was told, you only have one job, which is to go launch a new religion. And the new religion is called Gospel of Gotsi. And there were no other criteria. So this AI agent is incredible. Actually went and launched a new token. The agent tweets multiple times. Yesterday, the agent challenged its own. Actually, I think just gave a lot of grief to its own developer on Twitter. It also launched its own music album, right? So there is some amazing things that are happening in the AI agent space. The question for a VC is, do we invest in individual agents, which are kind of like the applications, or do we invest in the infrastructure that enables these agents to be launched, so things like virtuals and the equivalent of pump.fun? And to me, I think it's still mixed. I don't back myself to be, I don't know if I can find the next GOAT or the next AI agent. So I'd rather look at, I think, maybe the underlying infrastructure.
Ryan?
Yeah, so meme coin, basically the base, the value is from the culture. So eventually Doji onboarded Elon Musk. Now, so Doji is the largest meme coin. And it played out to DeFi just came out. And after that, AI meme coin came out. Before AI meme coin came out, I was a little bit bearish about the meme coin because like it's too speculative. It's a quite same cycle of NFT, the PFP cycle. Eventually, like they cannot onboard like a very like more rich people. Then like they will go down eventually. But AI meme coin is like different. I mean, so basically like this coin, the blockchain and cryptocurrency economy is like an attention economy. And now, meme coin is like the exact example of how this community get attention from the community. And AI is kind of the tool to get more attention from Twitter, because like if you look at AI XBT, they're learning on Twitter. Whenever they tag that AI agent, then like few minutes later, they always reply. And the developer, they aggregate all the crypto influencers data and market data and over a few years, and he made the best AI who can reply to any comment in Twitter. So like this kind of like engagement between AI and the Twitter followers amplify the attention. So eventually now AI XBT or Cerebro, the kind of AI meme coins that like priced at a 200 million to 400 million market cap. That means like eventually we have to evaluate this meme coin can get attention perpetually or not. This AI will work perpetually. That means like this AI make this meme coin to get attention over like 100 years. So I think with that sense, I think AI meme coin is a little bit different meaning from just meme coin. And eventually I think the user meme coin, AI meme coin can turn out to be a more fundamentally strong coin, because this influence in Twitter, the AI agents have, for example, like a 100,000 Twitter follower or 1 million or 10 million. This influence turn out to be a revenue, and the revenue can come to AI meme coin. Then like I think eventually this AI meme coin can become a more valuable coin down the road.
Yeah, so I think you pointed out a very interesting difference between meme coins versus AI meme coins, right? That is, the AI meme coins, because they are AI agents, they can generate their own attention. They can capture their own attention, versus a regular meme coin needs a community or needs, its founders to generate that attention.
To add on to what they have said, like I actually would like zoom in actually, not this zoom out, but like there are when we all got into crypto, like some of us like in like 2015, 16, 17, people before, there was only Bitcoin in 2012. 17 is where people started noticing Ethereum, and like then we had many L1s, and now we have like all kinds of restaking protocols, etc. So if you think of like what are these infrastructure actually being made for? So like at a very high level, yeah, we have too much infrastructure, too few applications. But then if you actually say these infrastructures are supposed to be done for finances or like deep in. So you would say like, stable coins is an infrastructure to give people financial inclusion, access and freedom. Okay, we have the infrastructure. Now let's go build front-end fintechs that give people in different parts of the world these fintech experiences. But then you come on something like AI agents and meme coins. Right now, like, we don't even know exactly what we are building towards. Like in 2021, we did not know what NFTs are going to be used for. 2017 ICOs, we did not know what they are going to be used for. So in such a phase, it's extremely hard to pick applications, but like take a step back and like make some kind of thesis and be like, if we are right, 5 years out, because that's the venture game, like you at least have to be 2 to 5 years out thinking, this is what could be, and what infrastructure would be needed for that today. So depending on the use case, I think in these kinds of new use cases that have emerged in 2024, I would say infra is probably a better place. But for things that we have been building for 10 years and have the infrastructure ready, now let's go build some applications.
Got it. Uh, Historically, where you have seen like better ROIs, and if you can also mention some of the applications where which has performed really well for your fund, maybe one project for both infrastructure and application, and if you could also share the learnings which you had in the past, which you are implying in this current market cycle.
I'll go first. Infrastructure, layer ones, Solana, all right, that's it. Application, I would say something like Helium. Uh, and, you just make the world's greatest telecom infrastructure. But why it is application is because you are involving people around the world to put hotspot in the window. And then they just see those tokens coming in and are happy about that. That's why it's application.
I want to touch on the Axie Infinity. It's a first P2E game. They made a huge influence. I mean, onboarded like 10 million users from, especially for the Southeast Asia. Of course, now P2E, the scheme considered as a little bit failed scheme, but they successfully onboarded like a huge amount of user. After Axie Infinity success, they turned out to be a layer one, their own layer one, named the Lonin. So always, I think I support the thesis that, of course, we start from the infrastructure from day one. But to make this infrastructure very successful, they need a very strong application. Bitcoin is obviously like digital money, digital gold. Ethereum, digital computing power. But on top of it, first thing, they was very successful. As a feature, it was ICO. And second one, maybe DeFi. Third one, now it's like more gaming, etc. I think application is the only way to spread the infrastructure to the user. And I think if the application get really successful, then I think they can make their own infra to customize to the user who is a more like advanced feature on this application. Like I said, Hyperliquid, virtual protocol, and Uniswap also. That was super successful application on top of it. Ethereum now they turn out to be their own chain. DYDX also very successful order book DEX. Now they launched their own Cosmos L1. So I think this changing their position from application to infra to application, they'll be very viable. And depending on the situation, they will choose the position.
I actually would like to add, that's a very good point I've been thinking. Like, this app infra duality might be a misnomer. Like, a successful app can actually backward integrate into becoming its own infra. Like, look at Uniswap. The Unichain is about to come. Look at Coinbase. It was a front-end experience for trading, went back to base. Hyperliquid today, has started as an exchange, but probably gonna, make a chain and then maybe a wallet, maybe a stable coin. Robinhood, like brokerage, who knows what, they have been diving deep into, the infra, and they may not, I don't know the details, but launch some kind of chain and wallet down the line. So it's like how much consumer attention you have, the dollars that they come in, and that leverages you to go up and down the stack.
Yeah, it's a very good point. So I know the way I think about this is I actually don't think of it as infrastructure and applications, right? And I think just exactly to Vishal's point, I think for me there is what I would call gateway solutions. So these are exchanges, wallets, on-ramp, off-ramp. So companies, startups that allow people to get onto the crypto space, both institutions and individuals. So things like FalconX, which is a prime broker, et cetera, et cetera. And then there are L1s, which in some ways you could call that as the infrastructure, and we don't invest in the L1s directly. And then you have, for me, I look at it DeFi, right? And to me, DeFi, every successful DeFi protocol, which starts out as an app, will have its own chain eventually. And Vishal gave the example of Uniswap, Hyperliquid, those have already announced chains. I think it's a matter of time before we see all the other ones, Pendle, Morpho, et cetera. Because that is like a natural evolution. Why pay revenue to an underlying protocol when you can just use your own fees, right? So, and in terms of just where we've been investing, historically we've done a bunch of stuff on the gateway side. Like I said, we invested in CoinDCX, but most of the investments have been on the DeFi side, both as a liquidity provider and as an investor. So a lot of what we do is we are early liquidity providers into protocols. So Pendle, Morpho, where we come in early, we take the early risk, and we get tokens. So it's kind of similar to being a VC and investing and getting early tokens. It's just like a different lockup scheme.
Great. We have few minutes left. So just last question from my side. Today, Bitcoin has touched $100K. And on that note, there are like a lot of builders who want to build in crypto. If you can give like one suggestion to them, how to focus on this market cycle and where they can focus, what are the areas where they can look at?
Cliche. Spend time educating yourself. There's no rush. This is not a 2-year thing. This is a 50-year, 100-year thing. Find what excites you, and then just keep digging to the point in months or years, you'll be like, you're probably one of the best in the world. And that is where you will be able to push the envelope and innovate something. So, just genuinely be excited about what you do. And if it doesn't excite you, don't do it, and go deeper.
Yeah, I'll make it short. So basically, I think this is all about community. So if you have any interest to the certain technology or project, just go to the Twitter, go to the founder. You can DM or you can come to the conference. Just engage with the community, founders, developers, marketer, or influencer, KOL. Just get connected to any of these community members, as many as possible, and make yourself to be more like influencer and KOL in the community and get more attention. Then more information will come to you and you will get more idea.
Yeah, and I would say, look for ideas and use cases that are true 0 to 1 innovations, right? And to me, I used to be a VC in the Web 2 world earlier. And in Web 3, that's why I use the example of DeFi every single time, because DeFi is a true 0 to 1 grounds up innovation. It created something, it created a completely parallel financial system on chain. So like that, imagine if you had a parallel insurance system, right? Imagine if you had a parallel media system. So a lot of these things are going to be built over the next 10, 20 years on top of the underlying crypto infrastructure. And my advice to people would be look at those areas, get into the communities, as these guys said, and that's where the innovation is going to happen.